Good morning. Oh, yeah. Good morning, everybody. Welcome to our newest edition of Bulls, Bears, and Breakfast. My name is Dirk. I'm the head of trading education here at PrimeXBT. And I have the pleasure, as every Tuesday, to talk a bit about the markets and what probably the markets are going to do on the way ahead for this week. So until Friday the 13th. Oh, did anybody notice that Friday is the 13th? I hope Jason doesn't come out like in a horror movie. I see that Catch is already online. How are you doing, Catch? Uh, Give us a like here, subscribe to the channel, write something into the chat so the YouTube algorithm spreads the word out there. But I don't want to talk very long about this. I want to jump into the charts and talk about what is probably going to become important this week. So we had non-farm payrolls, obviously, that came out on Friday. The number much better than expected. We had a live stream there. I said during the live stream I wanted to back up a little bit and not trade during this live stream because I expected a better number, but I think the market is going to react negative to that better than expected number. When under normal circumstances, of course, the market would react positive to more jobs than expected being created. This also became true. So we had slumps down first and foremost in the S&P 500. However, then for whatever reason, the market made a 180 degrees turnaround to the north again. And for me, what is very interesting now is this zone we are currently in here, for example, in Bitcoin. I've said it last week. I think I said it 2 weeks ago. This is the area here on Bitcoin at the moment to beat. Hold on a second. I just want to quickly check something. Yeah, my mic is on. After I forgot to turn on my mic once, I'm now always afraid that I keep forgetting it. So back to the chart here, to the Bitcoin chart. So this is the area really we need to look at the moment. This is the important area between the thick red moving average, which is the 200 days moving average, sits almost exactly at 28,000 at the moment. We also have the 100 days moving average, which is the yellow line here. And we have this resistance at 28,500 US dollars. I said it for the past 2 weeks. It's very hard to overcome. It would, in my opinion, take some very positive news. I was hoping, actually, like the last days, that maybe it's going to happen because we always saw Bitcoin peaking, the price of Bitcoin peaking over the 200 days moving average, but then ultimately being rejected. Yesterday, we saw quite a slump down then again, but recovered a bit from the depth. So this is the zone to watch here at the moment. And two direction we can see: either we're going to break out dynamically over 28,500 US dollars. If this is the case, how you can play this actually, or how you can trade this, would be to work here with a so-called stop buy order, meaning that you place an order, for example, that a long order, a buy order that gets executed, but not until the price of Bitcoin crosses 28,500 US dollars. Not very intuitive, I get this, but probably what's going to happen if we see a breakout here over that, we are probably very quickly also going to attack 30,000. But I don't see really a high chance this week, at least, of this happening. If not, well, it could, of course, happen if, for example, tonight the FOMC meeting turns out to be a very positive one. Maybe stating something like we don't expect further rate hikes anymore. Talking about economic news, what's on the menu there for this week? We're going to have tomorrow the first more important news coming out, the producer price index, so basically inflation for the producer side. We for sure, this is going to be biggie. We are going to have the FOMC minutes being released tomorrow night at 8 p.m. So that's 6 p.m. UTC. My calendar here has CET. Then even more important, on Thursday, inflation data. And we see here that the expected core inflation should come in at 4.1% after 4.3%. Remember, the core inflation is really the inflation the Fed is always eyeing. So that's the important one. For us as everyday traders, for sure, more important here, this inflation rate year over year also supposed to tick down a little bit to 3.6%. We're going to do a live stream. Of course, I'm going to do my analysis then again if I expect this number to come in even lower or maybe even higher. And we're going to do our community trading event there also on Thursday again. So going to start that at 12 p.m. UTC on Thursday, but you can also check out here on YouTube or on our homepage, PrimeXBT.com, of course, under Tools Academy, the announcement for that live stream. And then on Friday, we still have the Michigan consumer sentiment. Also not, it's important, but nothing really the market is looking at the moment. It's all about whether or not the Fed is going to raise the interest rates on the 1st of November again, which is the next meeting. And something interesting, in my opinion, that happened there, which I want to quickly show you before we dive into a couple of more charts for today, was that shortly after the release of the NFP of the non-farm payrolls on Friday, we saw the expectation of market participants that think the Fed is going to leave the rates unchanged slumped down to I think it was 71 or 75%. Now it's back up at 87.5%. And this is very interesting. It's going to be interesting to see whether or not, see here one week ago or 4 days ago, it was at 70.9%. So that's pretty interesting, in my opinion, has been rising now to 87.5% again. So the majority of market participants are not expecting a rate hike on the 1st of November. This can, of course, change then on Thursday again with the inflation data coming out. So for sure, something that we are going to watch, something we always watch also on the Academy Telegram channel, of course. Yeah, I said it right now, Bitcoin. So for swing trading meaning positions that I like to hold on for a couple of days, up to a week, maybe maximum 2 weeks. For me, not necessarily here something to buy. What you could do, of course, is if you want to start shorting Bitcoin up here at 28,000 US dollars, for example, there's a good chance that you can grab a couple of dollars, maybe $50 or $100 swings to the downside again. Just be sure if you do that, it's a bit like, snatching away pennies in front of a construction truck. Sooner or later, it's going to overrun you. So once the market really does, once it does that, do this breakout to the north over 28.5, you really want to not be in short positions anymore. So that's a strategy you could play. Try to, scalp a couple of dollars off the market at 28,000. I think our new crypto futures are also the right product to do this because of the super low fees. 0.01% if you use limit orders there, so that's unbeatable. Let's quickly change here to something else. I want to have also look today here at Bitcoin dominance. So how much of the total crypto market cap of cryptocurrencies, which is currently at, are we actually in the crypto market cap? Let's look here at coin market cap quickly. 1.07 trillion US dollars is the total crypto market cap at the moment. And Bitcoin dominance says here that currently 51.18% of this is made up out of the market capitalization of Bitcoin. This is also, for example, why I always like to look at the Bitcoin chart and not at some altcoin charts here. And what we saw, of course, here is that over the past months, really, this is also something I've been talking about a lot during the last year, where I always said, in order for the new bull market to take effect, we need to see Bitcoin dominance go over 50%, which we did. I started talking about, I think, this like last year, also August, September or something like this. And we can see that lately also here, with cryptocurrencies being risk-on assets, people tend to switch to what they perceive in cryptocurrencies as something less risky. And this is, of course, Bitcoin, if you compare it, for example, to other altcoins. You can also very well see this if you look, for example, here at the Ethereum Bitcoin trading pair, also in a downtrend here. So Bitcoin is stronger than Ethereum if this goes down, because it means you have to pay less Bitcoin per Ethereum. And what I expect here I don't, there's of course going to be fluctuation up and down a little bit, but ultimately we should go into this segment down here. So somewhere around 0.05. I wouldn't be surprised to see this in the last quarter now of 2023. Until then, slowly the bull market starts to take effect. We are not that long away anymore from a bull market. By the way, this is something we're going to talk about tonight also on Twitter, on our Twitter spaces. Have some really great guests there that are going to join me and talk about the Bitcoin halving. So if you are more into altcoins and you want to throw money at altcoins, at the moment, I still would be cautious doing this. Things are going to look different once we reach here 0.05 roundabout in Bitcoin per Ethereum. Yeah, let's have a quick look here at the S&P 500. And where's my S&P 500? Here we go. And that was quite a crazy ride, right? If you watched the live stream, you saw me that I entered a limit order there to buy at 4,200 because I said probably market is going to turn around, then straight head to 4,300. Which is exactly what the market did, but my limit order didn't get executed. So that was a good idea, a bad execution. And I'm sure this is also something that has happened to you before already, that you had the right idea for a trade, but so your trade didn't get executed, your order didn't get executed. And then you are left there saying like, missed opportunity, I missed some money. It's normal, and I'm emphasizing this so much here also on the Academy Telegram channel, because this is normal. This also happens to somebody who has done this for 25 years. This is part of the game, but lucky the markets present us with more than enough chances to turn things around again. So what is important here? So first of all, this area down here, and this is also why I placed the limit order between 4,230 and round about 4,000, excuse me, 190. This is an area of major support at the moment for the S&P 500. You can over and over see that again. And my recommendation really, if you want to learn how to read charts, always draw those lines of support and resistance onto the charts. Very easy to make them out. There's no wrong, there's no right, there's no science. At least with 200 days moving average. And whenever you see that those sync, when you have an area like where support in this case and the 200 days moving average are very close together, these are usually good spots to take trades into the opposite direction. There's a high chance that the market will get deflected. And as we see here, of course, this is exactly what the S&P 500 did. Doesn't mean this will hold on forever, but the first time such a zone is entered, usually it's deflected. Even if it's not deflected, you normally have a favorable risk-reward ratio because you can place, in this case, your long order, for example, at the next area of resistance, which was 4,316 here, and you could place your stop loss under the support, so let's say at 4,170, which usually gives you a risk-reward ratio of at least 1.5 to 1, meaning you can be, you only need to be successful with less than 50% of your trades, and you still can earn money with this. This is exactly what you should be looking for as a swing trader. Now, of course, things are looking a little bit different. So what last week still was a resistance has now become a support here. By the way, I would drag this a little bit down, maybe more to 4,300. So I wouldn't bet my life that we are like straight heading all the way to 4,600 again. What's going to be interesting for sure is if we should, for example, today see the market pulling back into this area of 4,300, there could be a chance for a long there, in my opinion. But then again, on Thursday, when we enter the inflation data, maybe you don't necessarily want to have that position because it's going to be a gamble for sure again. Last one we want to look at, or two more charts actually, euro dollar. Also finally made something like a turnaround here at 105. Seems to be also quite well supported there. Not much to do there at the moment. Also, this 200 days moving average is like somewhere in between. Maybe if we go, I don't see that happening now the next days, but should we go all the way up to 108, we could discuss about a short in euro dollar there again. However, at the moment, I wouldn't really touch that. Gold. It's also funny. I said this also on the live stream, that this is like for the longest time the first area again where I said this is where I would consider something like a long, and I didn't trade it, but I know a lot of you guys like to trade gold. Were deflected, so the way still is up there, in my opinion, all the way up to 1,928, where the 200-day moving average is at the moment. Still not a trade I personally like to do, because I'm not so much into trading gold. And last but not least, the yields for the 10-year Treasury bond, US Treasury bond, have come down also a little bit. We topped out here at 4.87% in yield every year that you get if you hold a Treasury bond like this. Yields coming down now a little bit, and I really would like the yields to see, first of all, good inflation data on Thursday, because that means we are very likely not going to see interest rates being hiked on the 1st of November. And for sure, we should see the yields then coming down more into this area of 4.5%, perhaps maybe even 4.3%, because the market is then anticipating maybe even rate cuts again in 2024. All right, let's look here. Actually, I wanted to mention this when talking about Bitcoin versus Ethereum, or Ethereum versus Bitcoin, altcoins. We are somewhere in the middle here. If we look at the altcoin season index, last 90 days, Bitcoin outperformed most of the other top 50 altcoins. Still, there were some that outperformed Bitcoin. It looks a little bit, so if we go down here to 30 or lower, it would look a little bit like we are entering a new Bitcoin season. And this is exactly what I said. I wouldn't be surprised to see Q4 of 2023 more an outperformance of Bitcoin versus altcoin. Doesn't necessarily mean that the price of Bitcoin is immediately going to 30 or 35 or 40,000. Can also mean that the Bitcoin price somewhat stays stable, so oscillates maybe between 25 and 30,000, whereas altcoins are bleeding versus Bitcoin. Normally, phase like this, not the phase to enter altcoins. This will again change when probably in the first quarter of 2024, the closer we are heading towards the next halving, which is going to be end of April. All right. Not many questions today. That's fine. I see one question here that I like to answer. Hold on. Where is my one of our frequent viewers? How are you doing? Would you expect next inflation data will decrease or increase? I haven't made up my mind yet, but we can quickly look here at Trueflation. So I use aggregated. Like, why do they have like 20% inflation right now? So what I usually do is I look at the US inflation rate, which is broadcasted by a website called Trueflation. They do a real-time inflation rate analysis. And what I like to do, because we are talking now about inflation, of course, year over year. So I like to see how's the trend in their analysis over the course of, for example, September. You can see it sideways. So it's going to be probably a little bit of a gamble, in my opinion. 3.6%. I hope we don't see something like 3.8%. I have to do still the deep dive, which is probably something I'm going to do tomorrow afternoon when I have some time there, to look more on the statistics myself. And then for the live stream on Thursday, I'm of course going to have an opinion about this for you. And for sure, we're going to enter some trades then again, if I don't find anything that's totally out of the ordinary. Excuse me. That's it already for today. So as you can see, market still a little bit like sideways on the brings. It's not really something that springs into my eye where I say, hey, this is something I really, really want to trade. That might change today. Actually, as I said, if we should see the S&P 500 going down to 4,300, again, I might engage actually in a long trade there. But then again, tonight, FOMC minutes coming out, and who knows, in which direction it is. The long-term picture, of course, still is bullish. I stand by this. I've stood by this for a year now, for over a year, and I'm still continuing to stand by this. And again, this doesn't mean that, for example, in terms of Bitcoin, we couldn't see 25 or 23,700 in Q4, because we still have a US debt problem that's slowly surfacing more, which, by the way, I also still want to do a video about. I keep on delaying it because I'm always so busy. And so this is going to be something that's in Q4 going to become more and more interesting. So I think volatility is soon going to pick up again. Until then, really, all you can do is stay patient. Really be picky about the trades you take. If you're not sure what trades to take or what areas to look at, come to our Trading Academy Telegram channel. But you don't need to read everything I post there, but every Monday I put out some charts where I say these are the areas of support and resistance. And I think just by using these areas of support and resistance, where you then know these are the areas where I could think about engaging in a trade, that also already could tremendously help you. That's all from me. Going to see you guys again on Thursday. Until then, take care. Always remember to